Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, July 31st, 2007, and another very difficult day for buyers on Wall Street today. The S&P 500 closed down $2.23. That's a loss of $1.51. And we've got that test already of these lows and the 200-day moving average once again. So people who've been buying in here aren't paying attention to the message of the market, because as we've clearly seen, the direction of this 5-day moving average has remained lower. And yesterday I said that, you know, getting past this 148 level might lead to a test of that 5-day moving average. And that's exactly where we ran into sellers once again today. So as long as that 5-day moving average is declining, I would say continue to be very cautious overall, guilty till proven innocent. Now, this might be setting up a potential test of a turnaround here. However, there's once again no evidence yet of a turnaround. So we do have these moving averages crossing back and forth, which suggests maybe we're going to see a little bit of consolidation here, but price definitely is what pays us, and price is saying lower highs and lower lows all day long today. If we look at the 2-minute time frame, you can see how we had real nice stage 1 over here, stage 2, stage 3 distribution, and then realistically the sellers really took control of the market here at about 1:30 this afternoon in the S&P 500, and from there we had a couple real nice thrust lowers. So sellers remain in control of the S&P 500 and the Nasdaq and all the other markets for that matter. For some reason that chart's not updated, but there we go. And actually that's not updated, so we won't look at the 30-minute time frame. Let's take a look at the semiconductors. The semiconductors, you know, it was really looking like a nice escape over here about a week and a half ago, because this market, although I was saying that on the daily time frame it still looks bullish, that picture is really changing now. We've got the 10-day moving average crossing below the 20. That indicates more neutrality than anything else. We're at a level that is continuing to be tested as support right around this 50-day moving average. But there's no reason to be a buyer in here. If you're making purchases in here because of this prior resistance and this prior support right in here, you're just guessing. What we want to do is look at support levels, prior resistance that has acted as support, and then look for a test, look for evidence. What we want to do is start to look at shorter term time frames and look for evidence that the buyers are gaining control. Yesterday we started to see these moving averages crisscross, but I also pointed out once again in this market too that we had a declining 5-day moving average, and as long as that 5-day moving average is declining, it's guilty till proven innocent. We had a test of the 5-day moving average, and from there the sellers took control and maintained that control all day long in there. So the IWM, same story pretty much. Yesterday I said that I wouldn't be surprised to see a rally up to the 5-day moving average in here, and if it did, that's a good place to lighten your position in here, because it would likely be an area where other people are selling, and that's exactly what we had today. It turned out to be a great place to make sales. Not necessarily at that level. Like, you know, when I mentioned the 5-day moving average and how it might act as resistance, again, it doesn't mean sell or buy at any particular moving average. It means drill down to shorter term time frames and see what the evidence is saying. So in the IWM, really the sellers took control right here as it dropped below the daily VWAP. We had kind of some choppy back and forth action, and the sellers reemerged again in the afternoon with a couple real nice drives lower. So there is no evidence whatsoever of a bottom in the IWM yet. We haven't had a full test of these lows, so you know, any turnaround that does come will probably be a sharp one, catch a lot of people off guard, as there's a lot of frustration in this market from people who are early to the to buy it for any bounce. But there's been no reason. That's what I've been saying, is there's no signs of a turnaround. For most people, the best position, I've consistently said over the last 6 or 7 days, is cash. Cash is a position. It allows you to look at the market objectively and say, now's not the time to be involved. Let's wait for prices to settle down a little bit. Let's wait for the buyers to regain control. And there's no evidence of that. So the Nasdaq, let's take a look at that. Nasdaq 100 sliced through this 50-day moving average and prior level of resistance. So that failed to hold as support. The only thing that stopped the selling today was the closing bell. We closed at 47.43. That was good for a loss of 2.3%. So this market has changed very rapidly, and the first signs of it came a week and a half ago when we were looking at this head and shoulders pattern. My initial target for that head and shoulders pattern was down about 48.75 or so, but targets, like I always say, are only there to give us an indication of what might potentially happen. They're not an area to cover your position. Here in this Nasdaq, we saw the same exact thing. We saw a declining 5-day moving average that acted as resistance. The market broke down from there, went sideways, and then these consolidations in the downtrend will usually resume in the direction of the trend. The trend is lower, so this weakness should not have come as a surprise. The intensity level of the selling did surprise me a little bit, but you know, surprises occur in the direction of the trend.